Alright guys, so this will be a macro video for days 24 mentees and triad. Um it will be also public on YouTube. The mentees have seen a very similar video back in maybe March, maybe a bit before, maybe February, where I talked about what I expected over the next year and the next 4 to 5 years. Um, Macro timing is extremely hard, right? Because you can think that the world is falling apart and yet the markets don't care, right? What you are looking at is euro. This is the asset that I trade the most. It is what I know the most about, right? Um, Also, what you see here are new week opening gaps that are important to world politics, right? And as you can see, they do get used for certain things. And you might say, oh, but that's just a fluke or whatever. But then, oh, it's not linked. Oh, that's not good. Where is that? Yeah. My chart is not set up the way that I wanted it to, sadly. Anyway, you see this. So you can see that the Russian special military operation, which other people consider the invasion of Ukraine, um, instead of the liberation of the Donbass region, um, they would not really consider this gap to be any more important than any other gap, and yet it's extremely important, right? That there, right, is essentially a red folder news event gap, right? Because a red folder day is a daily candle, right? And we have scheduled red folder news events for this. And yet, for some reason, world events tend to happen towards the end of the week. And even if they do happen during the week, it won't gap the market until Monday. It's a strange thing that you'll notice. But the world events that are required to do this have to be extremely big, you know, like Russia shooting an ICBM. Like, that's huge, right? Russia going into Ukraine, that's huge, right? Hamas versus Israel on October 7th, the year before, right? It's huge. And then you notice where they are inside the chart, at the lows, at the highs, predetermined in time, right? And yet, I've never, ever once seen a single person ever talk about world events like this, right? Now, Day predicted a black swan event around here sometime. I can't recall the exact time, but he did it, right? And that's why I entered Day's mentorship. And then that same black swan event creates the high of pound in 2024, and then, whoops, the high of 23 and 24 for euro. It's also where the high time frame sequential SMT got created. Yeah. Now, fair enough. We do have this gap here. High time frame gap, low above it. Quadrennial cycle sequentialism here. That has everyone thinking that we're mega bullish, right? And we could be, right? And this could be a magneto, right? Except for the fact that me personally, Except for the fact that me personally, I see this as a market structure shift. All right. And that's because on the yearly, we are going to close below previous year's low, in my opinion. All right. Once we do that, more bearish movement to come. Which means that this here, right, will produce a move, no doubt about it. And when people ask me what I think about Dixie, I think up only, right? And that's because I believe that the European Union is going to burn to the fucking ground, right? Germany entered a recession 6 months ago, if not a year ago. They've been deindustrialized by America's attack on them. When America went around the Senate, okay, the head of the State Department, maybe the CIA, and shit, what's the other one? Secretary of Defense? No. Anyway, there's a third one, right? If you read Seymour Hersh's article on what happened to the Nord Stream, it is the most highly probable explanation for the events that unfolded. And that is using hindsight to see who it benefited and who it hurt, right? Okay. So all of Europe's energy right now is coming from LNG exporters in America, right? The American attack on Germany, not Russia, on Germany, their ally, basically their vassal, right? Has deindustrialized them. The chemical companies and all the heavy manufacturing that they do is going straight to China. Why? Because they have cheap energy agreements with Russia. Okay. If the industrial base of Germany was ever to be united with the resource-rich Russia, that would be a new hegemonic power, right? This is why America cannot allow that to happen, right? So, understanding that means that there is going to be turmoil in Europe for, I don't know, at least 5 years, right? Maybe tomorrow they sign a peace treaty. I have no idea. But when that peace treaty is signed, then the markets will change, right? But if there is no peace treaty signed, there might be more volatility in the market. Okay. Another thing to consider is the fact that we have been consolidating for 2 years and we already broke out of the range and we went to our delivery. But think about this in a larger context of the quadrennial cycle. This is accumulation, and this is Q1. This is manipulation, and this is Q2. Right? Now, people think that we're going to have distribution here and do something like this. That might happen. That may happen. Except, in my opinion, we will simply just retrace back up to here and we will die. And we will take my target. Right. So while we agree that we're going to be inside a distribution, it's probably going to be a different direction. Now, if you go take a look at Dixie, my Dixie is inverted, so I'll re-invert it for you guys. You'll see that it hasn't really touched. While October 7th was used here and used to support here, it hasn't really the gaps, like the Russia SOM, hasn't been touched. Like, this is the cracking correlation between the assets. Because what is Dixie? Dixie is 60% euro. So is Dixie going up, or is euro really going down? Right? Because euro has been dying while equities have been going up. And that's why you see this Dixie rally while equities and Bitcoin are just going to the moon at the same time. It's kind of strange, right? And that's because nothing's broken in America yet. It's just Europe that's dying at the moment. You know, it's in a recession. Yeah, so like Germany's been deindustrialized. They will never come back as a industrial powerhouse that they were over the past 100, 200 years, whatever the fuck it is. America doesn't have the ability to fight Russia. Okay? They don't have the ammunition manufacturing capabilities to do that. Period. End of story. This is not up for debate. Right? Unless somehow NATO has all these secret fucking artillery shell manufacturing places in the world. Even though like we outsourced it to like China and all that type of stuff for like 20 years and all that shit, you know, yeah, it's a great idea, right? Outsourcing your artillery fucking production to your enemies. Yeah. Anyway, America is floundering on the world stage, right? It has an inability to project power. And that is why you're seeing the starts of, or maybe midway through the fourth turning, which I'm a full believer in. After seeing the Zirconium cycle and stuff like that, I'm a full believer in the 80-year, or 180-year, 140-year, 100 or 80-year fourth turning cycle. It's a good book to read if you are into quarterly theory. I'd suggest that. Now, if this candle here closes up here, why would you be bearish? Even with a quadrennial cycle sequential SMT showing itself. The problem is it's happening in the same quarter as one has already fucking happened. Right? So you were expecting this one to be the Q4 reversal. Right? There's your reversal. It happened in Q3. Accumulation, manipulation, distribution. Right? And it all took place underneath the quadrennial open. Like I've been screaming at the rooftops about since here. Alright. Then everyone in here wanted to go there. And yet I held my bias. Right? Why? Because I've had this bias since here. The only thing that didn't play the game was Dixie. But we had these massive aggressive moves. Right? Learned a lot in this. So much inside of this consolidation. It's unreal. There's something to be said going through an entire year of trading. Right? Because these are completely different markets. Right? This, completely different to this. And you need to know how to spot when this is going to happen on the high time frame. Which is why I made that call while everyone was bearish on euro. Right? Like, everyone's bearish on euro in here. Because they were so gung-ho about those highs on Dixie. Right? But there was no reason for it to die here. It had always wanted this. Now, I would really have loved it if euro had taken that out. Then there'd be no question about what's going to happen here. But needless to say, you need to start thinking about what is going to happen with these two quadrennial cycle sequential SMTs that are countering each other. All right. Just reinvert my Dixie. So let's say that I am wrong about this quarterly cycle sequential SMT, and this is actually the real quarterly cycle, quadrennial cycle sequential SMT, and we are going to proceed to rally up and take out the, it will be the 21 highs. We're going to go below COVID, right? Like this is the COVID, this is the COVID bull run, right? Yeah, 21. Yeah, it's the COVID bull run. This is the post-COVID, not so much recession, but the pullback on equities and shit, right? Is done by this move. And this here is an equity bull market because FX is consolidating, right? FX consolidates, equities will have a bull market, right? That was a hard lesson to learn, hard pill to swallow, right? Having this view back here was completely and utterly wrong. And this is the dangerous side to macro, guys. If you don't have any concept of the time it takes for these moves to play out, and you're a day trader, you will hurt yourself. Okay? But if you understand QT as a day trader, you can understand QT as a swing trader. You just have to change your red folder news events. You just have to change how long you expect things to happen. Right. So let's play this out. Game theory, right? What is going to happen? Let's just go with 2 because it will look better. What is going to happen, right, if this is a reversal? Well, we know that January is about to be upon us. We know that February and March is about to be upon us. We know these things. These are guaranteed. Right? Time is guaranteed. And then we also know that we've swept the low and we've gone into a fair value gap while creating quadrennial cycle sequential SMT. This is all reasons to see bullish movement. And yet, we are still bearish and going down. We're doing it from a news event that shocked the world and gapped the market. All right. So, say we get what I say and... No, actually, no. Let's just say that everyone else is right and we don't actually close below here. And we close up here. Okay? All of a sudden, we have this candle back up here and we want to go up. Inside of December and not January. Right. Come back down into the gap. Right? Proceed to go up. And then you want to see movement like this because this would be your distribution. After this is your manipulation. You want to see quick, speedy movement up to Magneto this high. All right. But here's the problem. Right here is Q1. Q1, Q2 of the yearly cycle. Right? So, say that we do get what we want and maybe we come down here again. Right? And then maybe we start to ascend like that. If that happens and we sweep this and then we go up, once we get to this, we now have a yearly cycle sequential SMT. And if that happens before we hit this, right, we will have our first, or actually, possibly our second high time frame sequential SMT. Because if pound can hit this, there's a potential that it hits this. Right? All the while, euro is way down here. Right? Very big difference in where these two assets are. And so any movement up has the potential to cause bearish sequential SMT. And if that happens towards the start of the year, then you're doing open high on the yearly candle. Right? And so if this is to play out this way, that's probably not good. And yet, if we continue to break down at the start of next year, right? There is no more potential for a high time frame sequential SMT if we have aggressive displacement down through this fair value gap and this continues down. Because the moment pound takes this low here, right? While this here gets taken out, there is no quadrennial cycle sequential SMT. Right? But you have the potential of one at the highs. Okay? Different story if January, February, or March does not take this low. And for some crazy reason, January, February, and March come here and take this out. But doesn't take that. And then you would have dual quadrennial cycle sequential SMTs for a bullish movement up. Now, that is something that I could get on board with, especially yeah, it would have to happen inside of this new week opening gap. It would have to happen inside of there because there's no fair value gap. This BPR has already been used for this move up. I wouldn't trust it. Yeah. We're more likely to invert that. So that is how you should be thinking about macro moves, right? You shouldn't be thinking, oh, look, we have this quadrennial cycle sequentialism here. Oh, we should go up. No, that is not a good idea, right? Sequential SMTs fail all the time, guys. That's why we have sequential SMT market structure shift, right? To help explain what is going on with that sequential SMT. So then it comes down to, on the higher time frame, what do you expect to happen? Well, for starters, right, we want to see a retracement. So we're looking at this high here, just for starters, right? Which equates to this high here. Yeah. All of this, whoops. There's a fair value gap attached to it, which is your internal range liquidity, right? But then, on top of that internal range liquidity, is the high to give you a yearly cycle sequential SMT. Now, I'll just quickly go to EG, and we'll use the high time frame for EG. So we have this BPR here. EG is something that moves so strangely in comparison to other FX. So just be careful when you're over here. I don't know if many people in the mentorship really use it. I use it to get bias on which pair I should be trading, sort of thing. So for the most part, EG trades in a range, but you can start to see that it isn't doing too crash hot, which means downward movement on EG is bullish for the pound, bearish for euro. So any move on Dixie, right, is amplified by what EG is going to do. But you can see the trend, right? The trend is down. We're going for this. It will get there. And it will most likely touch this. Which means bullish pound, bearish euro over the coming year or so. Which brings me to my next point, the even higher time frame. All right. When I say zoom out, most people zoom out to the quadrennial cycle by going to the monthly. I'm saying zoom out. All right. Look at this as a Sekelium cycle. Now, you can't see it here, but 85 to 2005 and then 2025, right? So this is Q3 and this is Q4 of the Sekelium cycle, right? And this is Q1. Yeah. Out here is the creation of it. We don't have data for it. But at the same time, inside of here, now what do you see? All right. This here is the original consolidation. First leg of reaccumulation. Smart money reversal. First leg of distribution. Second leg of distribution. When I started looking at higher time frame cycles, this is all I've been able to see since here. This is all I've been able to see. Right? And it comes from the Dixie chart. By plotting world events on the Dixie chart. This Dixie. Yeah, this Dixie. So I already said that this is the original consolidation. All right. But the reason that it is the original consolidation, yeah. So back here during the 80s, you have the Volcker recessions, right? And these were rolling recessions and extremely high inflation rate due to the fact that the baby boomers were at peak buying capacity, peak consumption capacity, right? This is the biggest population that the West has had. It happens after World War II, and the world is just in the rebuilding phase, right? Rebirth phase. And out of it spawns the baby boomers. And then 20 years later, in the 60s, they're starting to go to college, right? And then 30 years later, right, in the 70s, they start coming into their house buying stage, right? Having kids and all that type of stuff. Might have started a little bit earlier, might have started a little bit later, but for the most part, it's about in the 70s that they start to kick off, right? And it doesn't stop until they hit 40, 45, right? which will put you around 85. Okay. So that is the population demographics, and you can see that inside of the I think I have it here. That's the inflation rate. US population. Let's see if I that might be it. Total population for the United States. No, that's not what I want. Yeah, well, this is not exactly what I want, but this basically shows it. That's the population decline of this is inverted, right? Yeah. So that's the pregnancy rate falling off a fucking cliff. Right? Because this population doesn't have the credit boom that the boomers had. Right? Because population is based off fucking liquidity, essentially. Like when you get down to the nitty gritty details, like what creates a human, and that's cash flow, essentially. Because if you can't feed a kid, you can't. Whatever. Anyway, so this is showing it, but it's in reverse. Right? This is showing the population declining, right? Which is showing you that the inflation is going to go down because there's less people buying white goods for their houses and stuff like that, or cars or stuff like that. Which means that the velocity of money is much less, which means inflation comes down, right? And inflation is a great way to keep asset prices up and money, cash money, poor. Elites wealthy, plebs poor, right? We play two different games. So that is what kicks off this. Yeah. Now, everyone says that Volcker destroyed inflation. All right, Volcker destroyed inflation. It was Volcker who did it, and fucking Powell doesn't want to be remembered as fucking the dude who was before Volcker. I think his name was like Ward or some shit like that. And then that's why Powell hasn't cut rates, blah, 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 blah. So let me show you the Fed fund. This is what Volcker could change, right? This is where Volcker is. This is the recessions of the 80s, rolling recessions. This is the Fed fund rate. It went up to 19%. 19%, right? We're at 5. Okay? It went to 19%. And I am telling you that Volcker did fucking nothing. Because the Fed fund rate does nothing. It is a propaganda piece. It is out there to hide the algorithm. So the red folder news events can do what they need to do. Power can't move the market. So why does this matter? All right. Why does this matter? This is basically the trend that you will see for the Fed fund rates. Like pretty much up, starts here, pretty much down, starts here, pretty much sideways. This one here, up, this one here, down, this one here, pretty much up, pretty much up. And this is the decline, bases out, decline, slightly ascends, bases out, decline, ascends, crashes, bases out, goes up, but then comes down, kind of still based, and then boom. Now, Volcker is said to be the one who fucking fixed everything. Bloody blah, blah, blah. This is the Secretary of Treasury change. Now, do you think that Jerome Powell, right, who can come out and say that the Fed is going to drop rates, is the one who is truly in fucking control, right, of interest rates? Do you really think that? Because I'm showing you the Secretary of Treasury. And sadly, I don't have the Fed chairs here, but you can do it yourself. Right? You can do all this shit yourself. It's all on Wikipedia. Right? That's all I did. I went to Wikipedia, I grabbed the Treasury change, and I noticed something interesting. Right? Guess who's up for her position come Donald Trump's inauguration? You know, why certain things in politics are worth paying attention to, and why most of it should just be straight up fucking ignored. Right? I look at who the leadership change is. Yeah. Instead of listening to the news about, oh, such and such said this. Could give a fuck what Jerome Powell says about the market. I care about when Janet Yellen leaves office. Because if Janet Yellen leaves office, there is going to be a trend change, possibly, in the Fed fund rate. And where would that take us? Possibly. Down. And what would that do after that? After we hit the breaker. So if the Fed fund rate is coming down, then that means that Dixie should come down, because the Fed is going to drop rates. And that means people would rather be in other fucking bonds and all that type of stuff. See, the Fed is going to pull the rug and create the recession just like they did every other time. Right? They pull the repo window here and they seize up the entire banking system, and the banks won't do business with each other. Right? It was the Fed who did that. The Fed did something here. I can't really remember what it was, but they did something as well. The Fed, right, is just out there propagandizing you into believing that everything's okay until the moment that they pull the rug, and then, oh, sorry guys, we didn't see this coming. Right? They will fudge the data on the non-farm payroll fucking statistics to not trigger the SAM rule. So all the macro analysts will be like, oh, the SAM rule hasn't been triggered yet, we're not in a recession. Meanwhile, fucking, we've had 40% inflation. Right? The entire world's in a fucking recession. But equity markets keep going up. Because it's not time yet. It's not time for that recession to fucking play out. Or we are going into a mega fucking bull run of all bull runs, and this happens. And people get their wish. But expect Bitcoin to be at 300 fucking K. Right? Expect there to be world peace. Expect no macro thing to matter at all. And the markets just become a joke at that point. Right? The stock market, right? Sadly, I don't have this for you guys. Oh, actually, maybe I do. SPX. This is going to be a really, really ugly chart, guys. Really ugly chart if I got it. Ooh. Yeah. Right. So, while this isn't really what I want to be showing you, it's kind of, it kind of works, I guess. So here is COVID, right? COVID rolls the market over. Yeah. And then we crash in November, and then we sweep this low, and we got our liquidity, blah, 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 whatever bullshit you need to tell yourself. But then in April, they inject $2.2 trillion into the market through the CARES Act. So was it this flow being swept that fucking pushed the market higher, or was it the fact that the government devalued fucking the dollar, right, by $2.2 trillion by giving it out to people, creating velocity, which creates inflation, which makes, I don't know, the stock market go up? Because where does it $2.2 trillion go to? The stock market. Right here, where SVB collapses in March of 23, right? They inject something that is 3 times the size of the GFC. I don't recall the number off the top of my head, but as there's stupid amounts of fucking liquidity gets injected into the market, right? All throughout here, they are tightening rates, right? And here, they tighten rates here, and then they plateau, right? Let me just bring it up. Fed funds. All right. See right here? August of 23. August of 23, right? It plateaus. Retracement. Right? Now, why is this significant? This is the dot-com bubble. Right? Right here. That is the dot-com bubble. Why is that there? Why is that there? March of 2000. Pretty sure it happened at the end of the year, didn't it? 1 second. It's just saying that the high was on fucking March. But anyway, so this is when rates plateau, right? Basically stay flat. And during that entire time, the market stays at its highs, right? And then it starts to drop the Fed fund rates because something's wrong, right? And you have your rollover, right? Now the dot-com was a little bit early. I think the GFC was late. Yeah, GFC was late. So the GFC is more in line with what I think is going to happen for us with how it's been so far. Where we plateau right here. Oh, would you look at that? It coincides with Henry Paulson becoming the Secretary of the Treasury. Crazy, right? Plateaus. And during that plateau, we have a new high created. Right? And then after they start cutting rates. Boom. Right? And it don't stop until rates hit 0. Yeah. Then we come to January of 2019. Paul Tudor Jones comes out in September of 2019 and says that there might be a recession coming, and this thing called COVID looks really bad. In September. They don't blow the market up until March of 2020. Yet the yield curve inverted and Fed rates flattened out. Right? They flattened out and price went up instead of crashing. Right? Went up and guess it just went up. I don't really trade equities, so I don't really. I'm more of a. I'm used to being inside of a consolidation. Anyway, they collapsed the market. Right here, February. Boom. So possible new new treasury being put in right here. Right here, 2 months. And if that happens, we should see capitulation in rates, possibly. Right? Because Yellen went up. I don't think we're going to base out and consolidate here. I'm pretty sure we're in a recession. And so this is the move I'm expecting. Right? Which means that the stock market is pretty much getting to its high. And all we need is a high time frame sequential SMT and and we just need YM to fail at taking this high. Then you will have a quadrennial cycle and a yearly cycle, sequential SMT in one. Yeah, I would be all eyes on the stock market right here. That is going to be extremely important over the next couple of months. Now, it might just blow through it and it won't matter, but we'll see. I'll be keeping a very tight eye on that. And that's how quick it is to run through a macro idea, guys. Once you actually know what you kind of expect is going to happen, you can basically just be like, overall, we're fairly bearish in the market and all these things are adding up. And then we have the potential of our models showing up. That's it, guys, right? This is how you should be using macro content. All right. So coming back to Dixie to explain this out a little bit more. Why is it that I see it the way I see it? I see this as the original consolidation because this has the .com bubble in it. And it has us invading the Middle East. This was a massive policy shift in everything. All right. And it almost reaches premium. Almost. All right. So you have this consolidation that almost reaches premium, but doesn't. And then we come down here below this low. Do you see when we're doing it? Do you see the GFC starting right there? Right. This is the color revolution that happened in Syria. And I guess you could say, oh, sorry, here's the color revolution. This was the killing of Gaddafi that destabilized Africa to the point that it is right now. Right. These are the world events that should be treated like news events. Right? This here is Russia Ukraine in 2014. after Russia went into Syria because America tried to do a color revolution against Assad based off a fake chemical attack fucking thing, which anyone who has the internet believes that it was real is a fucking idiot. The Russian interference with America's plans was not taken lightly. Right? When Russia supported Assad, that is when this war truly kicked off, World War III. Right? Because it was the first true geopolitical move that Putin had done on the world stage. Okay. No longer standing back and let America bully everyone. Right? All this stuff is important. Yeah. Because it's on the charts. Okay. I've been studying this shit for the entire year. Right. I was doing this in 2022. I didn't understand it as well then because I didn't have QT. Right. But now, yeah, I can't unsee this at all. Okay. So we have an regional consolidation that was created off a recession and a massive shift in military policy towards the Middle East, where we waged war and bombed the fuck out of poor people that had no chance of ever fighting back against us. Right? I am extremely anti-war, guys. Extremely anti-war. It is the most horrific thing that you'll ever see. And you see it on the chart and what it does. So you need to pay attention to wars. Right? The GFC is the smart money reversal. Right? It's also a new original consolidation. Yeah. Russia, Ukraine. First one, color revolution, because a pro-Russian president got put in place in Ukraine, and America doesn't want a pro-Russian Ukrainian, right? Because they need to use the Ukrainians to hinder Russia, right? They have wasted all those Ukrainian lives to stall Putin, right? It's insane. It's absolutely insane. And then expansion, right? Then we have COVID. And then we have the special action operation, special military operation, whatever you want to call it. Expansion. Wars don't cause Dixie to go up. Anyone who says that is a fucking idiot, because wars don't make Dixie go up. Okay? Anyone who has ever plotted fucking wars on a chart can tell you that wars don't make Dixie go up. What it does do is make the world destabilized, right? To the point where they might need to invest into 10-year bonds or some shit like that. Or maybe they need to divest from the euro back into the dollar because, I don't know, the euro's dying. Because, I don't know, there's a possibility of Poland going in and fucking fighting with Russia next. Because they're not going to let Russia be, ever. Ever. End of story. It will never happen. right? In 2014, they did a color revolution in another country so they could send 500,000 Ukrainians to die in 2022. Oh, but it was Putin who did the invasion and all that type of stuff. I think you really need to hear the other side and learn a little bit about history, if you believe that. Right? The West is not the good guys. Right? COVID happens. A black swan event happens and it pushes us through COVID. Right? They predicted this, guys. This is the move. Boom. Day has also said, one of the best videos that he ever made, was as soon as we go below the quadrennial open, we could see the low for the next 4 years. So where are we going over the next 4 years if that's the low? Because I sure as shit don't think we're going to be going down below COVID again. Right? America's ability to produce ammunition at the level of Russia was 6 months, a year ago, is as early as 26 and as late as 28. Right? Q1, Q2, Q3 is 2005. Oh, it's 2025, which is the first year of the new Sakhalin cycle. And then 26 is when production of artillery might get on to the point of creating another war, World War III. But to be honest, in my opinion, we take this out within the next 20 years. I don't see any more downside on Dixie at all. I see this as the end game, right? That's the target. And that is the destruction of the fiat economy. And they will replace it with whatever it is that they want to replace it with. I have no idea. I don't speculate on that. I don't give a shit what they replace it with. All I am saying is that a fourth turning is coming about. The entire world is in massive turmoil at the moment. And the powers that be are so huge that we're talking about possible nuclear warfare. These things will move markets, guys. Right? These things will move the market. The market's not going to die. Right? No one's going to nuke the Nasdaq data center, and no one's going to nuke Switzerland. Right? The algo ain't fucking stopping. So these events are just news events. And so you need to learn how to trade these events by looking at them with the eyes of the fucking market maker buy model. Smart money reversal, guys. Happened during a world event, and it was a recession. Original consolidation, aka smart money reversal, happened with a world event. Right? And 3 fucking wars. Right? Inside of here, I'll just quickly go down and grab it because it is important. Because it's where all this stems from, right? 9/11 is the most vivid thing in my memory as a kid. Right? That is the close, and this is the open. And as you can see, that gap, the 9/11 gap, is what we reverse from in 2022. COVID, Black Swan event, hitting Black Swan event. Fucking tell me that they don't move the markets between the events that they create on the grand fucking scale. Because a person made a decision in a room to blow up the Nord Stream. Right? It's all planned. They set the dates and everything. Things just don't randomly happen. To think that is to be someone who has never applied force to the world and got the world to move. AKA someone who, an entrepreneur that creates a business. You know, it's a different mindset than fucking slave mentality of, oh, no, random things happen. Yeah, because I can't explain it. Right. That's all that is. It's just a cope of, I can't explain what happened. So, yeah, it's all just chaos. It's all just randomness. It's because you've never actually done anything in your life that created an outcome that you wanted. So you never think that you can do that, or anyone else can do that, right? When the yield curve, which is this, the yield curve, to get it, is, let me just bring this up, right? To get this chart up, it's the US 10 yield, which is Y, minus US 0.2 yield. Now this is the 10-year minus the 2-year. So this is the differential between those two things. Now, people think that the 2-year is controlled by the Fed, by them dropping rates, blah, 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 blah. That's a lie. The 2-year follows the 10-year, and the 10-year leads the Fed fund rate, right? So the 10-year leads, the 2-year follows, and the Fed just fucking comes out and says whatever the fucking 2-year is going to be. They don't do anything. Period. End of story. All right. Okay. So below this line, coming out of this line, I should say, going down below this line creates a bull market. Coming out above this line creates a recession. Going back down creates a bull market. Going back up creates a recession. Going down creates a bull market. Going up creates a recession. Going down creates a bull market. Going up will create a recession. Right? What you're seeing here is the dot-com bubble, the GFC, September of 2019, I believe. Yeah, September of 2019. Yeah. Paul Tudor Jones, September of 2019, on the media, talking about COVID. That doesn't happen until here. Creates a bull run. Oh, sorry, that creates the recession, the COVID recession, right? Which then leads to the 2001 bull run. All right. Then once we get here, it starts to get a little bit iffy. This has been the longest, I believe, yield curve inversion, right? The longest. This one here collapsed the entire world economy. A couple of months, a little bit under. This here, the stock market only just recovered from this. But Platty, we've been at all-time highs for fucking ever. No, actually. Should have it here. This is the NASDAQ adjusted for inflation. Right? Meaning that the gains on this chart are real gains. These are true progressive gains in value because it's been adjusted for inflation. Right? This here has been adjusted for inflation. The stock market has never recovered from 2001. Right? It has never recovered from 2001. NQ has, the Nasdaq has, but the S&P, no. Okay. And so everyone thinks we're in this massive fucking bull run of all bull runs and fucking we're going to the fucking moon. In reality, this is all just fucking inflation making asset prices go up. Just inflation, guys. Your entire life has been robbed by inflation. Okay. So, if the stock market has only just broken the high, what does that mean for the world? Well, when you take a high, generally you see a retracement, right? If not a reversal. You see this low here? This is 1945, the end of World War II. 1965. 1985, the end of the sexual revolution and the baby boomers being done. 2005. 2025. What you see here is the Circadian cycle. This is Q1, and Q1 generally has peace, and that is why it's generally an accumulation, because the world stabilizes itself. Yeah, and then Q2 is generally when the wars start. Oh, sorry. Q2 is generally when we have recessions. Sorry, an economic turmoil. And then Q3 and Q4 is generally when the wars will happen. This is true for the Circadian cycle, as it is for, I believe, the 16-year cycle. But it is very true about the quadrennial cycle. Right? So pay attention to that. Because fuck, I think we live in a simulation. Then Q2 manipulates, Q3 distributes, Q4 does what? If this is accumulation, and this is the manipulation, and this is the distribution, then what is this? The treasury is about to change, which means that the yield or the Fed fund rate is going to change, which means that somehow they know when the Fed goes in, or what, sorry, when the treasury goes in, that there should be movement in the opposite direction. And so right here, there is a, I think it's here. 1 second. Let me just, yeah. Right here, we have a quadrennial cycle sequential SMT. Bullish. Right? Yeah. And we want to see the yield curve uninvert bearishly, because it can uninvert bullishly, but it's uninverting bearishly at the moment. And that is the bullish version with the high end. The high end would have to come up without the low end going down, right? The high end would have to come up to meet it and then surpass it. And then that would be a bullish fucking bonds. If it was to do it that way, there would not be a recession, is what I'm trying to say, right? The way it's uninverting now, with the 2-year fucking smashing down, right? And the 30-year and all that, not doing fucking pretty much anything. This is uninverting bearishly, which means recession. They started cutting rates right here. They started cutting rates right here. They sped it the fuck up right here. They started cutting rates right here. The collapse didn't happen for 4 months later. They started cutting rates right here. The stock market dropped within 2 months. Right? This here is the recessions of the 80s. Right? Now, this has not been the deepest. There was a deeper one in the 60s that I couldn't see, but I've found a historical thing. There's one that's like here. But this has been the longest and the second deepest. The NASDAQ, adjusting for inflation, just took all-time high. Right? Bitcoin parabolic. Right? But Ethereum, not so much. We can take this high and create a new quadrennial cycle sequential SMT. Or this can just die. And then Ethereum can do it. Never taking this high. And Ethereum as a date with that low. Right. So why am I bullish on Dixie? Because Europe politically is in a clusterfuck. Economically, it is completely fucked. Militarily, cannot do a single fucking thing to defend itself. Putin can literally drop a nuke on every single fucking city in Europe before anyone can respond, because he has hypersonic intercontinental ballistic missiles with nuclear payloads or vapor bombs, right? Or he can fucking hit 2 EMPs above fucking America, taking it out completely, destroying the entire power grid with just 2 hypersonic ICBM nuclear payloads let off above America, right? If you do not understand these capacities, never speak about fucking warfare, because you just don't know what is possibly going to happen, right? Like, most people that talk about warfare are talking about in massive broad brushes and don't understand that wars are created, wars are won by the logistical chain behind them, right? Logistics wins wars. Yeah. All of this stuff, the market maker buy model, the yield curve uninverting, the 10-year going into a new 40-year move after it did a 40-year fucking bull market, then a 40-year bear market for bonds. We're now back in a 40-year bull market. What happened in the last 40 years bull market? Equities got fucking crushed. Actually, that might be a misstatement. Let me just quickly check something. I just need to check if it was rolling up and down, because if that's the case, then yeah, cool, I'm correct. I need SPX actually. SPX will have the data for the 80s. 80s. Yeah. So while they didn't get crushed, see, Volcker crushes the market, extends the market, brings it back down, and pumps it up again. Due to the fact that the interest rates go up to fucking 20, come down to like fucking 15, then go back up to like 20, then fucking come down. And there's another move over here. So it's just all over the place. And I think you'll have these fuckers in here explained by that. But all of this stuff, guys, all you have to do is go side by side and put the Fed fund rates on this thing. All data is just putting it on your chart and looking at it. You know, that's all I've done to come to these conclusions, guys, is I've just simply gone to Wikipedia and seen, like, look at this, right? This is the official start of the recession, right? In here. And then it collapses everything. Yeah. And then they do almost $1 trillion in bailouts at the fucking lows. Why wouldn't you be paying attention to the bailout, guys? Why wouldn't you be paying attention to when the fucking rates get cut? They just do it over and over and over again. And here we are being like, oh, we're trading price action, blah. And this is just what basic macro investors do. They just invest when the fucking bailout comes. And they just made like $10-20 million more than you did trading because you want to capture all these reversals and shit. But if you know the grand scheme of things, the things that take fucking a decade to play out, then you can be on the right side of the market for a fucking whole entire decade. Now, I'm bearish, and most people know that I'm bearish on all this type of shit, right? And it's because we're so fucking high up. The moment we take any of this, shit, if we could get down here, holy fuck, that would be amazing. But any of this, I'm bullish. And I'm bullish for, depending on what comes with the wars and all that type of stuff. But I want to be bullish for 10 fucking years. And just be done. Right? So don't ever accuse me of being like this fucking perma-bear. I'm extremely bearish, yes. And I've been wrong over the past year, but that's just because timing. And that's what Day is given. It's given us the ability to time things properly. A way to frame time. Right? You can see the potential sequential SMTs coming. You just have to wait. Wait for it to happen. And if it does happen, trade it. And if it doesn't happen and I'm wrong, then I'll just go long. I'm no longer stuck in this, oh, it has to happen right now. No. I learned that lesson, right? Very hard lesson to fucking learn. That macro takes macro timing. Okay. I think that's everything that I wish to show for now. I talked about how I see this as just a market structure shift. I do see a retracement coming down somewhere inside of here. Maybe take this low. That might be nice. And then continue movement up. Right. On euro versus pound, pound I just see going up. I don't see pound taking this low. I see this low as being pound's low. Right. And then on euro, we are taking this low most likely this year. And in my opinion, we'll close next year, or 2020, sorry. We'll take this low next year. And in my opinion, next year we'll close below this low because we are coming for the original consolidation. And this might happen in 26. It might happen in 25. I'm not too sure. We might have a massive black swan event that kicks this recession off and it's huge and devastating to the world. I have no clue. Right? I just know that price is telling me that so far I've been correct. Right? And this just confirmed everything about what I know. And this move was so amazing to watch. Right? Frustrating as shit, but so fucking amazing to watch. Watch it play out like I was expecting here. Right. Q4 reversals. Right. Or sorry, Q3 distributions, Q4 distributions are fucking a sight to behold. Right. But Q3 and Q4 reversals are fucking amazing. All right. These 2 quarters, yeah. Yeah. When it works, holy fuck, it's amazing. Anyway, guys, I think that's enough for today.